There's some belief that between the parking and the retail, you can cover the nut and have some cash flow, or is this a covered land play for when you think things return?
It's a site that could be redeveloped into something even further and higher density.
5 years from now, somebody wants to buy it and put a high rise there and you cash out for big bucks.
I like the neighborhood. I think it's a decent story.
Yeah, I like it a lot. It's a wonderful, fantastic, terrific property. You'd want to own this thing for a really long time. I'm all in on this one.
Welcome to Real Estate Anonymous, the internet's best podcast about Elliot saying F-bombs and us looking at real estate deals each week. This week, Eric brought a deal that was super interesting and located in the northmost bougie part of Atlanta, which is near and dear to his heart. So we dug into it and learned a lot, and I thought it was a really cool case study of how to think about real estate. So hopefully you enjoy this. Elliot saved all of his cursing for the end, so stick around for that part as well. Here's the episode.
Welcome in. Let's light this candle.
Well, good news for the audience's perspective. We got all the depressing life news we each have.
Yeah,
so Eric didn't share it before we click record, but we'll have some positive.
The first part of the morning was tough.
I'm gonna go lay down and cry for a while after this opening with you cats.
So I had this thought on the drive in. I was thinking about how does an LP, these retail LPs, these kind of mass affluent folks, how do they get suckered into some of these real estate syndications? And aside from my usual derision about what I think about the syndicator crowd, I kind of have this theory, and we'll workshop it live. I think that what happens is you've got this group of people who are pretty highly educated, doctors, lawyers, dentists, pilots, whatever. You're in some field that allows you to make a lot of money. And to make a lot of money, you had to go to school for a very long time, learn a whole lot of things. And so you become very, very smart about one particular thing. The tech crowd is another example of this. So you get this really specific expertise. And I think part of the problem with specific expertise is a lot of folks conflate that with broad knowledge. And they think, well, I'm very smart at this thing, so I'm probably reasonably intelligent in other things. So my intellect will allow me to figure out if this real estate investment is good or not, even though I don't really know much about real estate. And it's an interesting dynamic that I think you see at the higher income level. Because if you ask, I've got a buddy who's a cop and a buddy who's a union iron worker. If you ask either one of them, do you want to put money into a real estate syndication? They'd be doing that, you know? but if you ask like the tech bro who's brilliant at computer programming, or if you ask the pilot who's a high income, you ask these folks, they're not wealthy enough to have a family office.
Tell me more.
They're not wealthy enough to have like a guy at the gate saying, no, this is a bad investment. So they're just kind of winging it. And they look at these PPMs and they think, yeah, sure, I'll buy this. I'll buy into this deal in Knoxville. And it becomes this weird, they just conflate broad knowledge with specific expertise, I think, quite often. That's probably how they end up in that position.
And probably, don't have a lot of those folks aren't used to getting ripped off or people trying to rip them off. So it comes out of the blue. They're not used to a street fight either.
It reminds me of two things. One, it reminds me of the scene from The Godfather when Fredo's like, I'm smart. You could have. Like, that's when I hear him talk. That's what I think. I'm smart. They could have given me a shot. But I've seen it. I mean, Elliot, I've seen it a ton too. And it happens not just with smarts, but also happens with people. Like I've had buddies who are like, you know what I'm going to do? Like I sold this company and I'm good. I have money and I know how to do business. I'm going to get into this cannabis industry. And like, they're shocked that the cannabis industry is full of total scumbags, like total scumbags. And they're like, okay, well, I started to work with this group in Vegas. They robbed me. And now I found this new trustworthy group. They're in Albuquerque. They rob them. And then I have found this new group in Denver. So it not just applies to sophistication, also applies to quality of people, because they come from banking and they're like, oh yeah, they're just like normal humans. It's like, no, they're total criminals. Like you're going to get robbed.
You're going to get robbed.
I think there's people that are good at business, that are good operators tend to be not good investors. Because there's this optimism and this can-do attitude that's required to be a good business operator. And a lot of times those folks will go into the investing world saying, we can work through this. We can fix that. That's no big deal. I can change the outcome here. It just takes some hard work. And a lot of times they'll end up over optimistic in something that, especially in real estate, that can't really be changed. You can't really work your way out of it. So you end up with outcomes that are not optimal that they got led into because of optimism.
Joke around on Twitter and say that the American dream is to make a shitload of money in tech and then slowly lose it all to a bunch of real estate bros who can't read or do math.
Well, it happens. It happens.
There was we do have to recap at some point when I think Ali Moyes, who I'm sure he seems like a nice guy, very opinionated, and he was like, I've invested with every single one of these GPs on Twitter. They're all lying. I was like, whoa. Anyway, that just went from 0 to 100 really fast. So we should talk through that. That was like a year and a half ago.
Shocked to hear that. And what I love the most is the multifamily GPs who have all of a sudden in the last 4 months been like, guess what? We do industrial now. I'm like, it's because you were never good at multifamily. Like, if you knew the asset class, you could just continue to invest in it today the same way you did whatever. Maybe I should start syndicating deals on Twitter.
Well, you get the cops in on the deal.
All right. So, Eric, you brought this deal. You're actually working on this one. Maybe? No?
Wow, just putting Eric's shit out in the street, aren't we?
Yeah, this is a terrific property right in our backyard.
All right, sorry. We could edit that part out. And I was like, you're in Atlanta? This looks like what the kind of stuff you do is. Anyway.
You offered $4 million here, right?
3171 Peachtree Road. At this part of it is in Buckhead. So the high income part of Atlanta, probably highest income part of Atlanta. And at an intersection, at the northern end of this street, you've got the sort of financial district and fashion district. About 2 blocks south, you've got the core of Buckhead Village, which is another walkable fashion district. So Hermes and Dior to the south, Neiman Marcus and BCG to the north, right in the pocket of the highest income. And this is a super funky 2-story building on a corner between Trader Joe's that goes off like all Trader Joe's and a little groovy little former car dealership that has been converted into specialty retail to the south. And this occupies this unique sliver between the two and backs up to some new boutique hotels and high-rise apartments, et cetera. So unmatched location in Atlanta, or I mean, a superb location. It's got some quirks to it. It's not quite in either one of those places I just described. It's a little bit of an in-betweener, but you're in fantastic geography generally. Across the street from it.
And so how far north from the city are you here? Just trying to get some bearings. Maybe because I've been to Buckhead before. You like 15 minutes north. Yeah, it's a whole different like second downtown area, but it's not downtown Atlanta. It's not the city center.
Yeah, it's not city center. And then so Atlanta works. There's sort of 3 primary in-town commercial nodes. Downtown, north of that is the Midtown area, which is probably the highest density office and residential area. And then this next node to the north, Buckhead, is the, historically the financial and retail center of it, surrounded by the highest income parts of town.
Okay,
from a residential standpoint.
We got
probably 5 miles north of downtown.
5 miles north, so 15, 20 minutes, I guess, at the most.
Yeah.
You've got just under a 1 acre site here, pretty rectangular, I guess, as ish. Just under an acre, and you've got a 20,000 square foot 2-story building on top of it. So it's sort of half covered and half parking. And I guess the play here, what you think, it's obviously redevelopment. Is that kind of how you're looking at this?
Well, that's why it's interesting is you've got, in a hot market, this is a high-rise site. in a market like now, that financing and market conditions make it impossible to develop right now. And so it's this unique point in time where you've got a 2-story quirky, funky building that has utility and surface parking that may be priced for what it is today. So you're between Trader Joe's. There's a couple interesting nuances. One, you share parking with Trader Joe's, and anybody that's ever been to a Trader Joe's knows there's never enough parking. So you've got a little bit of leverage by having the parking lot that's next to, this bustling grocery store. And then on the site is this 2-story collection of gritty bars, unpleasant bars as they were. This is the kind of place you might get shot. In fact, people do from time to time. So it's got.
Elliot's like, what's the address? What time do they open up?
Yeah.
Tell me more. So it's out of place. It's this black sheep in the middle of a really terrific area. And that's what gets me intrigued. It's got some billboards on top. And we're at a point in the market cycle where it's not out of the question that something like this can be bought for what it is today. So a couple of years ago, these things rarely sell because they provide income to the current owners. And these types of properties have usually been held for a really long time, as this one has. And there's enough income there to kind of keep, limping along, waiting for somebody to come in and pay you the big dollars to do a high rise. Rarely do they sell at a point where it makes sense to use the existing improvements, because otherwise, why would the existing owner sell? So I think at this point in time, this is the kind of property, because it's being marketed, shows that there's an opportunity to buy it for its current intrinsic value, as opposed to paying for some high-rise land value. And that's what, to me, gets me that's why I'm keen on it.
Well, do you think these tenant types, these ratty bars, to me, surrounded by Trader Joe's, smells like the play could be, you buy it, you spend time working those ratty bar tenants out, you make money along the way from the billboard, you end up eventually with hopefully some better nearer term tenants there. And then 5 years from now, somebody wants to buy it and put a high rise there, and you cash out for big bucks. Is that one strategy?
You're always walking that fine line, because to get good tenants, you've got to give them term and you've got to give them TI. So you're investing more into the property, so that basis gets higher and higher, and makes the idea of building something high density, tearing it all down and building something high density becomes that much more difficult. However, in this kind of a location, these rents can get really high. And at some point, under some circumstances, this kind of a deal can, when these rents get high enough, you don't need to tear the thing down and build a high rise. So to me, the intriguing part, you got to get the bars out. Unless you want to be responsible for folks getting shot. But those, you can reinvest in the property in its current condition, make something that's really terrific, have surface parking, be in the best part of town, and it just depends on how much, what it's going to take to get the seller to part with it.
So you've got bars called Red Martini, Moondogs, and The Hole in the Wall, which all appear to be holes in the wall. And so it's just three bars.
What's the name of that there's a big retail chain that sells, they have them here in San Antonio, that sells, has a mattress place and has, lawn furniture and has it all. It's one big store, but they pretend like it's 5 stores all put together.
Like Rooms to Go or something like that?
Something like that. This is like the equivalent of that, but if you want to get shot. You got
yeah. If you like to drink and you have a fancy for guns.
Death and heroin.
Death and heroin. Boy, we've got some strong openers for today's episode. I'm careful not to besmirch another business, but just next door is a food emporium that looks to be about 15, 20 locations. So they're doing fine and they don't need my endorsement. But the name of the restaurant is Kale Me Crazy. And there are few things that kind of get under my skin more than that.
More than kale.
Yeah, just the whole like kitschy name, Kale Me Crazy, and they're selling those juices. You know how everyone's doing like, oh, try this charcoal juice, and it's like $8 for this little shot of charcoal water. And people are like, oh, it helps your gut. No, it doesn't. This is just dirt water. None of this matters. Anyway, I'm picturing Elliot in yoga pants standing in line for a kale smoothie. Just me and my moose knuckle waiting to get some kale smoothies.
Super angry at the whole time. Yeah. Right before he goes for his workout at Sculpt House.
Yeah, it pissed off is my ambient state. You seem to think that you could buy this thing today. And so you're just getting kind of a free option on the back end, basically. You're going to buy it today. Yeah, your margin might be a little thin, right? You're probably going to have to still pay up a decent number for the site. But is there some belief that between the parking and the retail, you can cover the nut and have some cash flow? Or is this just is this a covered land play for when you think things...
Call it 20,000 square feet. In this market, fixed up, this thing's worth maybe as much as $70 a square foot. So you do the math on, call that 140 a year. Pretty competitive, lower cap rate on that. And you're pushing up against what land trades for, which is a pretty unique place to be. I'm being a little generous with those numbers, but if you did that, you're at $1.4 million, 20,000 square feet, $70 a square foot.
He's doing the math. Can you answer a question for me? Why do these brokerage firms need like 80 people on every listing? Like, what do these people do?
I don't know.
Maybe we should wait for Brett to come back to answer this. But I'm like, why do you need 6 people for this? What are you all doing?
You definitely don't. My favorite is when you see the articles in Traded or The Real Deal. Oh, something sold. And they have like 19 headshots from all the people involved. And you think they just weren't involved. I think it's just, I don't know, branding for the company, get everybody's name out there as often as possible. But if you called anyone other than maybe the first person, they probably aren't going to know a ton about this deal. I'm going down the rabbit hole reading reviews of Red Martini Restaurant and Hookah Lounge. And I got to tell you, boys, this place is choice.
So imagine the convergence of the Red Martini and the Kale Me Crazy crowd. Okay, here's the mathematics. 20,000 square feet. This is the trick though. $70 a square foot. It's $1.4 million in NOI. Let's say that at a 7 cap. That's $20 million for less than an acre. That's $20 million for an acre of land in Buckhead is about right. It's traded for more. It's traded for less. To be in at that price, now I'm leaving out a lot of stuff. Like it's going to take a lot of money to get this thing fixed up. $70 is at the high end of what you could get. You've got to get the right tenant. There's a lot of constraints on the kind of leasing that you can do given the parking, blah, blah, blah. But this is within the realm of making a deal. And I think, this price somewhere in that range probably gets it done, which makes it sort of interesting. And then long term, it's a site that could be redeveloped into something even further and higher density.
Not to get us off topic, but it just reminded me, there was a Twitter thread of a guy who was buying up like these low end murder bars like this. Like he was rolling them up like as a small time investor. I got to find it. Did you guys ever see that? It's like the economics.
Well, we talked about it on here. Yeah, I'm not a guy.
That's the guy you know. Okay. That's where I remember it from. All right. We should edit out my terrible memory then. I'm sorry.
He's buying the whole business plan is buying dive bars from alcoholics.
Yeah, I've been combing the reviews to try and give people a good idea of what's going on here. And there's really 2 reviews that stuck out. One is a woman is upset that she wasn't let in because she was wearing Crocs. And I thought, well, that seems correct. Like, of course, you're an adult. Why did you leave the house in Crocs? But the other one, which is quite interesting, a gentleman named Kevin is quite upset, says, do not go to this bar if you need to go number 2. They have no stalls in the whole bar. The only bathroom they have for men is an ice cooler, so you have to get shoulder to shoulder with someone to pee. Absolutely unacceptable that a resto bar doesn't even have stalls. I had to run to my car and drive to a gas station 10 minutes away just to go. Never coming here again.
Yeah, well, the pro move would have been if he wedged his way in the shoulder to shoulder at the ice cooler and
just put one down there. All right, this is taking another turn. Are we buying this thing or what here, Eric? I like the neighborhood. I think it's a decent story.
Yeah, I like it a lot, and I like it a whole lot. I think the wonderful, fantastic, terrific property. You'd want to own this thing for a really long time. It's about getting it at the right valuation, and I think this is the time of the market where these types of properties can be bought. You know, when people own effectively covered land plays in a hot market, they're selling for some increased land value, and the covered land component gets minimized. In the type of market where development's much farther out, that's when these types of properties can be bought. Yeah,
I agree.
I'm all in on this one.
It's got a V-shaped billboard on the roof, so you can kind of advertise from both sides. Is that a value to you?
Billboards are great. Billboards are terrific, and in this area, they're very hard. We had a property a couple blocks away where the billboard paid significantly more than the building underneath it. In a good market, billboards are one of the great American businesses. They're Girdley-esque.
Amazing. Makes me want to write a thread about those. So big question about this is, to some extent, some of those billboard leases are long-term deals. We have to make sure when we start to see the information about the policy or about the property that you're not stuck with a 25-year lease on this billboard, for example. You got to try to negotiate out of, or then make sure the landlord didn't do anything stupid with these get shot bars.
What makes billboards very difficult is almost always the board and the support structure is owned by the billboard company on a ground lease. So they always use the leverage of, when our lease comes up, we will take the board with us, and you can't get them permitted to build them back in a lot of locations, including this one. If this one were to go away, you wouldn't be able to build it back. So they hold the majority of the cards on that, because if you don't renew them, they take their toys and go home. The second part that makes these billboards tough is they often lease them in conjunction with multiple other locations to whoever their advertiser is, and so you don't get the pure value of your individual location. So it's kind of hard to make a deal that reflects the value of an individual location. So there's nuances in it, but here it really does have some value.
So Eric, how would we have a lot of beginners listen to the podcast. Like, how would somebody do this deal, or how would somebody who should do this deal, and how would they put it together?
You don't have this be your first deal.
Well, I think it ends up taking, let's say, $15 million to buy the property. It's going to trade somewhere in the $15 to $20 million range, I think, if it trades.
You think today that's what it trades for?
Yeah.
Yeah.
And it's going to be, difficult to put much debt on it, given the nature of the current tenancy. Not a lot of lenders are going to want to sign up for, hookah lounges as their collateral. So I think you got to be in a position to write a check for the purchase price and then work through the de-tenanting of it. My understanding is a lot of these leases are on short fuses, so I don't think it's that difficult. Most people are also end up in default to their lease if folks are getting killed there. So that gives a little bit of a way to parachute out of these leases. But yeah, I think it's you got to be able to buy it for cash, get the tenants out, get plans put together of what you're going to do with it, get it released based on those plans, and then go find a bank that'll loan you the money to do the improvements. But you get all that done, I think you can end up owning a respectable yield on a tremendous piece of property that in our lifetime is a high-rise tower.
So who's the ideal tenant? You're not going vertical yet. That's kind of that's phase 2 of this thing. But you do have to get some new tenants in there. And despite my passion for the Red Martini Lounge, that's probably not the right tenant. What kinds of tenants are you going to put in there?
Oh, this is the Lululemon crowd. There's probably an ability to do some sort of a transaction with Trader Joe's for more space potentially. But this is the premium retail crowd that, sort of the highest rent paying. It's not a luxury location. That's a block or two to the south, but it's the premium retail folks that, and specialty retail that'll go there. And maybe, there's some sort of a financial services type thing that it becomes God forbid, a Chase Bank or a Charles Schwab type building, and do a single tenant lease for the whole thing. There's no shortage of tenant demand for this.
And so presumably the owner has kept Moondogs and Red Martini Lounge in there because the cost of getting them out and refitting the building might be more than they want to pay. And they think I think I'm done here. I'm going to keep what's going on, but I'm not going to fool with this too much.
Yeah. My sense is, without being too close to it, it's a owner fatigue issue. It's probably been owned for a really long time in a family, and people are tired of fooling with it. And the idea of investing back into a property when that's not your business is foreign to those types of owners. So it's a fungible asset. Let the next person beat their head against a wall to squeeze the value out.
And what's so funny about that is you could probably get a better return if you're that current owner reinvesting in this asset than you could something like, I always think about
for
that.
Sure.
You often, when you're looking at your own real estate, if rents have moved or there's some increased return on cost you can get through renovation, sometimes the best investment available to you is within your own portfolio. It's not looking for a new acquisition. It's, hey, we put dollars in here. This thing can hum.
Almost always that's the case.
Yeah.
I would not be surprised if the scenario here is 82-year-old boomer dad bought it 35 years ago. He's some sort of, refrigeration, like HVAC guy, and they've owned it the whole time. And his kids are all about 50 right now. And they're all like, it'd be nice, a beach house. And we could solve a lot of family problems by cashing this thing out. And I think I bet you that's the scenario.
Yeah.
So my money's on that.
Yeah. $15 million takes a lot of stress out of things.
That's good times. Good times. All right. This is really good.
Yeah, I don't think we got anything else. This is a good one.
We did great. A few too few F-bombs, Elliot. Is this because you were in your office today or what's up?
No. I'm tired of Spotify beeping me out. I listen to this podcast and it's like beep, so I don't know if I'm just giving up or if you pussies are going to let me be who I am.
Do not be a quitter.
Yeah. I don't know who's in charge of picking the correct. So you can say, but you can't say. Is that correct? Is that how this works on Spotify? There's some beep. Yeah, I'm not involved in how the sausage gets made, but someone over on Girdley's side is like, no, that's one too many, and they edit me out. Oh,
you are sorely mistaken if you think I've been charged of this crazy train.
Okay.
There's people in the dark room in the back running the show. So.
Yeah. So whoever is listening to this and having to edit this.
All right. So the other thing is I get yelled at all the time to promote more. So if you've listened this long to this episode, tell your friend about it. Somebody who you think would love to learn more about real estate in this format, and that'll help us grow the pod. So thanks for being here, everybody.